Hello everybody, welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so this is our real estate market update for Las Vegas for condos. These are only condo numbers that we're going to talk about today. Okay, we're going to start with the Market Action Index. Now, the Market Action Index for condos in Vegas is 60. Now, you may have remembered we did one of these about 4 months ago, and it was like, I think it was close to 90. It was like a super seller's market. 60 is still a seller's market. It's actually a pretty good seller's market. It was about 70 last month. So we're swinging back to more of a normal market. Inventory has increased, and we're going to go through all these numbers specifically. But what's really interesting is the trend of the Market Action Index. And I've got a slide for that right here that I'm going to show you. Okay, this is the trend for the Market Action Index. What's cool is that this trend breaks everything into quarters, the top quarter, bottom quarter. And all of you can see if you look back at 2019, we have to be around between 30 and 40 to have a normal market. Although we're heading that way, we're still up pretty high. What's really interesting is we have an 80 Market Action Index for basically the bottom two. So the top of the market, the top quarter of all condos, Market Action Index is like in 50 something, but it's still almost 80 for lower end condos. Why is that, Juana? Why would a $180,000 condo still be a smoking hot deal and people that are maybe looking at $400,000 condos somewhere?
Right. So look, at $180,000, almost everybody can afford it, and and most importantly, it's at that price point where investors can make money on rent. Because let's face it, condos are much more likely to be turned into a rental unit than a single-family home, and so that means that investors are much more interested in the condo market because it's more affordable for them.
Juana, what about rising interest rates in that person who is maybe going to buy a $300,000-$400,000 house? What happens to them now? Maybe they don't qualify for that house, but they still qualify for a loan, but just less.
Right. So look, the people who were interested in purchasing those homes, they're still around, and they're still having to make those decisions between paying for somebody else's house or paying for their own house, right? And if they're still interested in paying for their own house, so maybe they're purchasing a smaller house, maybe they're purchasing a condo. So they're still out there. Their credit is still good. They still have money for that down payment and for the closing costs. And so now they have more choices. They have more choices in the condo market. They have more choices in the single family homes. And the buyers that were out there before are still out there. I think that they're more nervous because there's a lot in the news about negative housing numbers, so they are nervous. They don't want to be in the situation where they buy at the top of the market or they buy at the wrong time, whatever that means. So they are still very nervous, and that's why you're seeing cancellation rates on purchases and that sort of thing. Yeah. But
it's an emotional decision. It's not it's just emotional. They're just afraid.
It's fear. Yeah, it's fear. And fear is normal and it's natural. But at the end of the day, we talk about this all the time, whether you're selling or you're buying, it has to fit, such a broad range of things in your particular life that trying to time the market in the short run is really counterproductive, because real estate is a long game. So even if you end up paying a couple $1,000s more than maybe you could pay in 2-3 months down the road, you're going to have this property for 7, 10, 15 years. In the greater scheme of things, it doesn't make any difference. Okay, but what does make a difference is your quality of life here in the here and now.
Right. This is the median list price. If you look at this chart, the interesting thing you'll notice is that it's the highest it's ever been, of course, but we don't see it turning downward. Now this is, I pulled this data today, so this is accurate data as of today. You do see the trend is slightly lower. That's the little dash line. There's a little dot that's below the diamond that's slightly lower. But if you look back at last summer of 2021, you notice that between summer of 2021 and December of 2021, median list price fell. It does this every single year. It falls. median list prices decline because the hot part of the market, when the prices kind of get pushed up, is in the spring, and then throughout the summer and the fall they decline in the winter, and then they start coming back up again in the fall. So you're seeing that with the condo market. But what's interesting is this does not reflect all the fear that people are talking about, where the market's already collapsing and blah blah blah. This doesn't show any of that, right? The data doesn't show it. Other than people saying it, you're not really seeing it, at least here in Las Vegas in the condo market. Right. How is the condo market maybe more insulated potentially? Is it just because it's at a lower price point? It's more affordable. It's a smaller supply of homes, because it's not like, single family homes is obviously the largest asset. There's more single family homes than condos, right?
Right. So condos are more affordable, and then the other thing, like I said, they're more affordable both from an owner-occupant standpoint and an investor standpoint. They are that entry point, right? Mm-hmm. And because they are that entry point, they have the largest pool of buyers.
What's really interesting is when we look at the median list price and break it out by market segment, you can see that the bottom 3/4 of the market has had a pretty very stable and normal, what looks like price appreciation. The upper quarter of the market has kind of been a little crazy over the last couple of years, but you see that trend of it goes up, it comes down, it goes up, it comes down, which is cyclical, annual cyclical. And you can see that that's starting to happen a little bit this year with the upper end of the market. But look at that difference there. April 2021, the median list price of a condo in the top quarter of the market was over $600,000, and right now it's about $540,000. Mm-hmm. But we're talking a year. Mm-hmm. It's changed this much in a year, but the median is still up, because remember, the median is the middle house. It's not the top of that market. It's not an average. It's the middle house.
Right. So remember, this also reflects choices, right? We've talked about that. Because there was no inventory, there were no choices, but now we have more inventory, we have more choices. So that kind of smooths out those prices.
The other thing we're going to talk about is median days on the market. Mm-hmm. Now, this chart is very interesting. This goes back, of course, almost 4 years. And you can see that median days on the market normally is around 100, right? 90, 100. It's 3 or 4 months of supply of inventory, days on the market. And then all of a sudden, you see it, we're still basically at the lowest. If you go back to 2021, it was basically at 0. And that's not a joke. It was literally half of the condos in the bottom half of the market literally were purchased on the day they were listed or incoming soon, before they were put on the market. And this shows us that even here, we're still under 25 days on the market, median, which is still very, very low. It's a smoking hot market. That's why it's considered a seller's market. This also does not reflect a imminent collapse of the housing market. Mm-hmm. What we would have to see literally here is this number would have to be over 120 days. Mm-hmm. It's at 25. Right?
Right.
And we've been waiting for years that people told us that Vegas was going to collapse for whatever reason. We're going to run out of water, or I don't remember. There's a bunch of reasons why Vegas isn't going to make it. They've, nuclear war, I don't know what the other ones are. Scorpions will take over. Okay.
Well, so look, the fact that the number of days on the market is growing, that's to be expected. Like Todd said, it has to do with the cyclical nature of it, as far as on a seasonal basis. But also, it's good that people have choices. Again, I keep saying that, but it is good that people have choices, because I felt so bad for buyers for the last couple of years that they've just been kind of in this no-win scenario, and that they're finally catching a little bit of a break by having some choices.
This is the inventory. This is the total inventory for condos in Las Vegas. Remember, this is just Las Vegas, and not the entire MLS. You can see the normal number here is about 550, and we have under 200. Mm-hmm. Under 200. While yes, that is a increasing amount, it's not anywhere near what it would take to crush the market, collapse the market, crash the market, destroy the market, even for prices to go down at all. Mm-hmm. Like literally, this sub-segment of the market still shows pretty normal, healthy, like long-term price appreciation, right? Based on this. You have low supply, you you have low days on the market, and you have not a substantial inventory.
Right.
So why do we do one report where we talk about homes, and then we break out the different values, and then we do one where we talk about condos and we break out the different values? Why do we do them separate?
Well, because they are, to a large extent, completely different markets. Because single-family homes, have a much more diverse price range. They're much more diverse in size and locations and that sort of thing. While condos, they tend to be in the lower price point, and they tend to be much more entry level. So it's worth noting the difference between them.
The other interesting thing is condos tend to be more cash purchases.
That's true.
And homes, because all single family homes, 98.5%, will qualify for FHA financing. Detached single family homes. Most condos do not. Over 50% of all condos do not qualify. At one point in Vegas, we had over 90% of all condos in Las Vegas did not qualify because so many of the subdivisions were over purchased by investors. They didn't qualify for FHA anymore. They'd all lost their certification. So literally there were subdivisions you had to pay cash. You didn't have a choice. And a lot of that's been fixed over a certain amount of time. Plus the loan products have gotten a little better to take that into account. Condo market in Vegas pretty strong. For people that are thinking about, hey, what about an investment property? There's one big downside to buying a condo is investment. We don't own a condo, right? We don't have any condos.
No.
Why? What's always the big problem with owning a condo is an investment property?
My big issue with condos is the HOA fees.
Fees, okay.
They tend to be really high. So let me kind of give you an example. So if you're purchasing a condo for, let's say, $500,000, and
which is at the top of the market.
Right.
That's like super expensive condo.
Right. So if you're purchasing a condo for $500,000 and then you're purchasing a single family home for $500,000, I can guarantee you that the difference in the monthly HOA fees is astronomical.
Okay.
So like you're dealing with maybe a high-rise condo where the HOA fees are maybe $1,000 or more a month versus a single family home, same price point, that maybe that HOA fee is $50 a month.
Right.
So it's not even close.
And usually the problem isn't the high end, because when you get to that, we're talking probably at a high rise or some high end unit. Okay, for $500,000, you're in a luxury area in Vegas.
Right.
Okay.
Right.
We're talking about the $180,000 condo that has a $250 a month HOA. The problem is the rent you would get. Let's say you can get $1,200 a month rent, which would be awesome if you could get that much, right? But now $250 of that, and you can't make them pay the HOA. That's the market rent. It's $1,200. So now, you're better off buying a house that you get $1,200 a month rent out of, because now you don't have to pay, the $250 a month HOA. That's generally the problem with buying investment property that's a condo. Now there are other people that like them because they're low entry and they get to whatever. But there's problems selling them to them, because with the same issue is sometimes the subdivisions get too many investors in there, and then when you go to sell it, you're restricted to only another cash buyer, and it limits the thing. That's why the main reason we've never really liked buying investment condos. Right.
So, and then the other thing is, remember, as far as that condo is concerned, your debt to income ratio is affected by that $250 a month condo fee, because that's one more financial obligation that you have. So whether you're doing it as an investor or as an owner occupant, that becomes an issue, because maybe you're qualified for payments up to X amount, but now you take a big chunk of money like that $250 in an HOA fee, and that pushes you out of that price point for that unit.
And this is different than you're deciding to come to Vegas and just get a condo because you want a place to crash and you don't want to have to maintain a yard. This is a completely different scenario. We're talking about investment property. You're almost always better buying a single family home, at least in this market, for an investment property than buying a condo.
Right.
Yep.
But there is a place for condos as far as in your, whether you're an owner occupant or an investor. It has to make sense for you. It's not for everybody, but that's one of the things that always concerns us with condos is the high HOA fees.
In another week, we will be doing the update for the real estate market, the regular one for houses. We just did one a week ago. Remember, we do them every 2 weeks now, the update. So we do 2 a month for the housing market for houses, 2 a month for condos. Because we're tracking this, we want to keep everybody up to speed. As we had somebody contact us from out of the country that they own investment properties here and they'd like to keep track of the market. So they watch the videos, and this individual said he's been watching for a decade.
Yes.
For a long time. So we appreciate that. That's great. That's the reason why we do them, so that people can, find out what's going on here in Vegas and learn about the market. But, we definitely are seeing more supply throughout the market. We're definitely seeing slightly longer times in the market, but not that long. The list prices are certainly being adjusted down. A lot of those list prices, though, were not realistic list prices. These were everyone's trying to get 20, 30,000 over, and now they're doing $5,000 reductions every 2 weeks. And that's what you're seeing, is this cascade of the market. This is the leading indicator, though, of a softening market, but it's really churning back toward a regular market. Not really. This doesn't happen very often. We've only really had this happen probably twice in the last 20 years, where the market cooled this quickly.
Right, but both of them were precipitated by black swan events. So,
right.
In all fairness,
and there's a lot going on, right? We have supply chain issues. We still have pretty high inflation, the highest we've had since the early 80s, which is 40 years. And we potentially have a recession. We did a whole video on that. Actually, the chance of recession is really not within the next few months. It's really mainly next year. Another video we're going to do on that, because some new data just came out, and consumer demand is still really off the charts. Like, people are buying stuff like crazy. So the economy is still kind of chugging along.
It is. And we've had so many things that were unexpected happen in the world over the last couple of years, that as far as predicting anything for next year, I think is just foolish, because everything is changing so quickly, and so many things that no one saw on the horizon are happening.
Yeah. Anyway, thank you for making it to the end of the video. Please like the video, subscribe, hit the notification bell, and leave us a comment. And what else?
We'll see you on the next video.
Okay.
Bye.
Bye.